This is something that is I think, the end game of Bitcoin treasury companies, and the end game, in fact, of Bitcoin ideal as a whole. As I said, one of the early Bitcoin adopters, maybe one that is hiding behind Satoshi, Halfine, talks about digital money as the end game of Bitcoin. He talks about different banks adopting BTC and currency backed by BTC as the ultimate store of value and medium of exchange. And I really believe that local Bitcoin treasury companies have a very huge role to play in this regard, and have a very huge opportunity of becoming Bitcoin-like banks, to propose, currencies or seemingly products that are exchangeable and that are as liquid as currencies, backed by the most powerful asset that we have ever seen.
Valen, here we have already the first example of a bug. For example, like the stablecoin backed by Stretch.
Yep,
Um,
Saturn by Saturn Labs.
yeah. So how do you see like this universe of like potential universe of stablecoins being backed by digital credit and like yeah, how do you see this space evolving basically?
I mean, Borja, to be honest, I'm very surprised that most major banks have not already jumped into the opportunity. Just imagine that you have uh, a product that is yielding 11, 12%, that you are able to offer to all your range of clients, a yield that is already higher than most savings accounts, let's say
Yeah.
4, 6%, and pocket the difference. I mean, this is how huge the opportunities for US, EU, Asian, world institutions. And so I think that the US has already, began moving on that. I would not be surprised that a GP, a Goldman, a Morgan Stanley would, in the next 3 to 6 months, propose something that is seemingly what I've just said. But I think that's also a tremendous opportunity for European banks and European, in fact, actors, so big treasury companies, to play a role in this adoption, to play a role in making institutions understand that this is practically the opportunity of the century in terms of how you harness credit markets and fiat-based credit markets. So credit markets that are based on a currency that devaluates itself from minimum 2% per year. This is the
Mhm.
mandate of the to a hard currency that is backing basically, a credit line that are bulletproof toward inflation. So this is a no-brainer opportunity that, again, I'm surprised that most banks have not eagerly jumped on right now, but I would expect that once the first mover moves, we'll see much more of them in the future.